What's going on, everybody? Welcome to another episode of the Rapid Review. Appreciate everybody joining us live. I see a couple new faces over on YouTube. So shout out to you guys. Yeah, as we do every single week, we'll be talking about what went on in the overall market, what went on some of the leading themes, industries. We'll look at some stock charts. We'll talk about exposure levels and a bunch of stuff really to just get everybody ready to trade for next week. So without further ado, it's time for the Rapid Review. All right, so as always, there's the disclaimer. Read through that. Most of you guys know the deal. This is educational, informational purposes only, not financial investment trading advice. All right, so let's get started. Current state of the market, we're in uptrend. Power trend is still holding on, still intact. Looking at the distribution days, we got 5 distribution days on the S&P, 2 distribution days on the NASDAQ. So when we flip over to distribution day tracker, you can see what's going on over there. Really, the changes for this week, looking at the S&P, we gained 2 distribution days. So we had 3 in the beginning of the week. Now we have 5. The 2 that were gained were on Tuesday, which is the 11-4, and Thursday, which is the 11-6. Those were regular distribution days as selling came into the market, increasing that count. You can see then also this black day, just so people know if you didn't catch us down here, that's a stalling day, but overall count at 5. Looking at the NASDAQ, we had 1 distribution day on the NASDAQ this week. We gained a distribution day on Thursday, that 11-6 day, bringing us to a count of 2. Just want to put this out there because I know a lot of people are CANSLIM traders. A lot of people are following IBD. My count varies by 1. On the S&P, they're showing 6. I'm showing 5. What that really comes down to is just a determination of volume source and what the volume showed on some down days. S&P, NASDAQ, looking at the index volume varies a lot on different platforms. What I try to do is look at various platforms, various outputs to see what the volume looks like, and I take my consensus based on that. Needless to say, it doesn't really change much in terms of how I'm looking at the overall market. We're basically looking at the same 5 or 6. Really doesn't make too much of a difference. In terms of the distribution day count, it's not that high on the NASDAQ, but when we look at the charts, we'll talk about some of the different things going on over there. S&P is a little bit on the higher side, looking at 5, and like I said, IBD with 6. Looking into next week in terms of if we're likely to lose any distribution days, that's not the case. We need 25 trading days off of the actual trading day that acquired that distribution day. Not going to happen. And on the price action, you need a 5% move. Many of these days sitting at negative. Most of them are fairly far off of the actual distribution day close, so to really get a 5% move in the market, not extremely likely. So likely not going to see any distribution drop off next week, and only possibility of really adding. Looking at the current state of the market, so we'll start off with the weekly. The S&P was down 1 point. Oh, all right, green is not what it's supposed to be. It's supposed to be red. My bad. Didn't update that. But down 1.63%, down 3.04% on the NASDAQ, and down 1.21% on the Dow. So all indexes down. They should all be red. In terms of the closing range, the S&P closed in the 38.81% range, NASDAQ closed in the 31.21% range, and the Dow closed in the 40.76% range. So all closing in the bottom half of the week. Not positive action there. And for 2025, looking at the S&P up 14.40%, NASDAQ up 19.13%, Dow up 10.44%. All right, so let's look at the moving averages. Hey, what's going on, Chad? User Q500. Absolutely, would definitely look at those stocks for you. Not a problem at all. And then we also have Mandarik. I got to get better at pronouncing all your guys' usernames. You want to look at Palantir, Weldon, and fall into AI theme. Yep, and we'll definitely look at those, and we'll talk a little bit about my thoughts on this AI bubble as we get to the charts. Moving averages. All right. So we broke below the 10 and the 21 on both the S&P and on the NASDAQ. We held above on the Dow, but still, we were above these all last week. Now we're below. Definitely in terms of the short-term trend of the market, this is a negative trend. 50-day being more of the macro longer-term trend, but this is still not good. We're not too far below the 21, which we'll look again on the charts, but we're pretty far off the 10. Let's jump over and let's take a look at the indexes. All right. So I always start looking at the daily and predominantly looking at the NASDAQ. That's where a lot of the stocks that I tend to trade tend to fall under. All right. Looking at last week, where we kind of left off, things were looking pretty positive, right? We were just underneath all-time highs. This was Friday of last week. We were just underneath those all-time highs. We had this small pullback. We were definitely extended, right? This was a rapid move with some cap ups and big strong move up. So the kind of slow pullback and this pause wasn't really too concerning. We did see some resistance in that first attempt off of that small one-day pullback. But again, nothing was really concerning because of how fast we moved up with, and kind of welcome to see things just kind of stall out for a second. That continued going into Monday, right? Monday, we had another day showing some resistance at that all-time highs, but we closed still closed up for the day. Everything really Monday, everything was looking pretty just healthy, and like the market was acting as you'd expect after a quick run up over that last week. The thing that really brought a damper onto the market was really Tuesday, right? Tuesday, we had this huge gap down. We gapped down below that 10-day simple moving average. And then we also broke below that little one-day low that we created, short-term low, but that October 30th low right here. Still not entirely concerning, right? We had this big move up. We did not like I did not like the fact that we got below the gap up low over here, but we were still staying above those all-time highs. Again, being that we moved up rapidly, seeing a pullback was kind of somewhat expected, really. But then you can see as we went through later on in the week, things just got worse. We continued to trend downward. We got below that 21. And then to me, what was really concerning, which was on Thursday, which that distribution day was added, was the fact that we broke back below that 10-10 high. That brought us back into this range-bound area, back below this big Trump tariff kind of day that caused us huge selling into the market. And getting back into this kind of range-bound area, not what you want to see, right? We made a big breakout. Think about this as a stock. That's how I like to think of things, right? We pulled back, we tightened up a little bit over here after some choppiness. We gapped up, we broke out, we saw this kind of go on a run, and then we rolled over. And that's just the same way you wouldn't want to see that in a stock. You don't want to see that within the indexes. So basically like a failed breakout on this market trying to get to all-time highs. As I came in Friday just looked even worse. Like at some point during the day, we were below the 50-day simple moving average. This is the first time, if you actually zoom out here. Oops, I zoomed out on my wrong screen. If you zoom out here, this was the first time that we intraday broke below the 50-day simple moving average since we've reclaimed that 50. We've been able to stay well above it throughout this entire uptrend for this year. So this is the first test we're getting of the 50, and I think that's something just to keep in mind. You're going to have in a bigger uptrend, there are going to be points where you test that 50, where you pull in. That doesn't necessarily mean we're going to completely roll over, but once you get to that point, that gives us an area to say, all right, what do we do here? What's the plan? Is the market going to be holding resistance and holding above it, or are we going to start spending some time below it? So seeing that first test, definitely something that we want to really keep track of, because the 50-day simple moving average, that's our macro trend, right? You look at the 10, not too big of a concern. The 21, really big for a lot of swing traders. That's your kind of shorter term trend of the market. Your 50-day being that more macro trend. And then your 200 being like, that's like big institutional trend type of thing. But for most of us position and swing traders, that 50 days, that big macro trend. The good news though, good news in what happened there, right, is we tested that 50 and we had a very strong upside reversal. We were able to not only get back above the 50, but we were able to get back above the actual open of the day, and we actually were able to close in the 98.80% range for the day. So positive reaction at the 50 does not necessarily mean that this market is okay, we're done, we did our pullback, we're going to go off to the races to the upside again. But in terms of just looking at pluses, minuses, big minus getting down to that level, but at least a plus for now, seeing us hold that. So like I said, the big thing looking at here is the fact that we broke back below that 10-10 high. Not a good sign. Did not want to see that. The fact that we broke the 50 intraday, not a good sign. The reaction at the 50, somewhat positive. If this becomes a low, we're still creating that higher low, right? We're still creating those higher lows. We haven't had a lower low in this uptrend, but that's yet to be seen, right? And in terms of just talking about key levels, looking at here, on the downside, right, the 50 is the big one, right? Can we spend time more above it than below it? But then after that, it's that prior low, that 10-10 low, this 10-10 day being a real significant day with the highs and the lows. If we break below this, we are now creating a lower low, and we're doing so below the 50-day simple moving average. That is not what we want to see for the overall uptrend. Something really to keep an eye on, the 50-day and that 10-10 low. Watch that, because you can see here, right, we had this 925 low, and then we found support there, never creating that lower low, basically finding support. Can we find, if we do come down to that area, if we do break the 50, do we find support again at that area, making a really strong line in the sand, or do we break below it? And that's definitely a negative signal. In terms of the upside, really, it's the 21 and the 10 and the 10-10, these three levels that we're looking at. Can we get back above there on the upside? And as always, making all-time highs is a positive signal. So I think really right now it's that 10-10 area. Can we get right back above that? Maybe this was just a shakeout, similar to when you see a stock break out, squat below the pivot point, and then break back above. Maybe that's what happened. Maybe it isn't. We'll see what happens. Ideally, what I would like to see, if I'm being honest, and obviously the market doesn't really care what I would like to see, it's going to do what it's going to do, but I would like to see us tighten up. I would like to see us go sideways for a little bit. I would like to see this all just a sloppy up, down, digest, tighten up, give us a really strong line in the sand against the 50, and then can we break in either direction and just give us an idea of which way this trend's going. So that's where I am at with the NASDAQ. We'll look at the weekly just to show what the weekly looks like. Again, macro trend, we're overall up. You can see that right there in the 10-week moving average as well as the 50. We're trending upwards. This isn't necessarily over yet, right? We're not in the game of predicting. We're just seeing what's going on. It's not over yet. The volume, which I don't have on this chart, I have another one of my charts. Volume was a little lighter this week. And like we said, we did close in the 31% range for the week. So other than that, I don't see anybody dropping any questions on the NASDAQ. So we'll take just a peek at what the S&P looks like. And it really honestly looks pretty much the same. The difference being a stronger day because we actually closed up for the day on Friday. But other than that, I mean, pretty much identical, acting very similar. We're in that range bound area. We're below this moving average. We're above the 50. We had topped out here. It wasn't as skyrocketing of a break out of that 10-10 high, but still rolled over and seeing that here, but not as weak on the S&P. And we'll see a little bit of that too when we look at some of these industry groups. Speaking of that, let's do that. Let's jump over to Deepvue and let's take a look what's going on in the theme tracker. For those of you who don't know, I'm a Deepvue partner. This is the tool that I use for all my stock analysis, looking at industry groups, everything. This is the heart and brains of my trading operation. Tool's great. I highly recommend checking it out. The waitlist is about to open up. The last I heard is next week it should be opening up. So if you're not on the wait list, get on it on YouTube. The link is in the description. On X, link is in my bio. That will just let you notified when you can get access to it. So you don't have to put a credit card or anything. It'll just notify you. Might as well sign up and then make the decision if you want to check it out when you get that email, but might as well get on that watch list. And then I also have a code on both those areas too, which will get you 12% off an annual membership. One of the best price tools for what it's capable of as well, which is why I use it. All right, let's get into the theme tracker. So here we are. You got weekly, 1 month, 3 month, year to date. The way I look at this, I know there's a couple new people in here, is like the 1 week, okay, I want to see what happens each week, but the 1 month and the 3 month are really where I pay most attention. And when I see something consistently showing up in the 1 week, I can kind of guess that it's going to start to continue to show strength as across the board. For the 1 week, the big things here, we're seeing solar showing strength again. That was a group that had showed a lot of strength off the bottoms and turning around, and it kind of paused. It looks like it's starting to show strength again. You can see airlines showing some strength, bank, real estate, biotech. Biotech is another big one that I've been seeing a lot of strength, and medical. So those still up there. The rest of the market kind of not showing much strength at all. And then looking at the 1 month and the 3 month, 3 month, you're still seeing the Bitcoin miners in that 3 month time frame. They are not performing as well when you're looking at it on the 1 month time frame. So they're definitely getting hit. But really on the 1 month, the oil and gas, solar, steel, biotechs, medical, this is where we're seeing a lot of the strength, right? The AI starting to lag. You can see AI doing well here, but on the 1 month time frame, not doing well. On the 1 week time frame, not doing well. So hopefully this kind of gives you an idea of how I'm using these 4 trackers to just see where is that money flowing. On top of using this, let's jump over to my ETF theme tracker view. What I have on here, let's get this all set up. What I have on here is my giant master list of a bunch of themes that are looking at what's going on in all these different industries and themes. And I like having a chart attached to what's going on. That gives me the ability to just dissect it the same way I look at the market, in the same way that I look at charts, stock charts. And down here, what we have is all different time frames, the same that we had on our other theme tracker. So the first thing, let's actually start off. And here I have a weekly. Here I have it. This should be daily. All right. And I like to zoom this out just a little bit more so I can see the overall trend. So let's look at the last 5 days and just look at relative strength when compared to what's going on with the overall market. You can see you had insurance looking like it had a pretty strong week. The overall trend, though, we could see is kind of in this sideways action. So this could possibly, as you can see, it is starting to tighten up a little bit. This could start to break higher. The Brazilian market doing well. Solar. This is the one that we were talking about, right? Going back in the beginning of the year, it was coming off the bottoms. We really started to notice the strength, I think, somewhere around in the August timeframe, and then now it's really shown that it's in that like sustained uptrend. Hasn't really broke out of completely. It's starting to break out of that sideways action. So I'm really paying attention to this. It has been on a very, very strong run. We are seeing a ton of volume coming into this. So solar, very, very high on my watch list. Energy in general has been tied to the AI market and been something I've been watching a lot. All right, about Bitcoin miners, we got a comment about Bitcoin miners doing well on some time frames. Is this explained by some of them pivoting to being AI data centers? I'll be honest, I don't look too much into stuff like that, right? I don't worry into the nitty gritty of, why is this stock moving versus this stock? Is it because of AI? Is it because of a tweet by Trump? Is it because of this? Is it because of that? I just follow price action. Price action is telling me what the buyers and sellers are doing. That's what moves the market. That's what I'm worried about. Right now, Bitcoin miners definitely lagging. It could just be base forming. It could be something going on. It could be, who knows what it could be, but I'm focused on price and volume action and that alone. The stories behind it, everybody's got a different, reasoning for what's going on. But doesn't really matter the reasoning. All that matters is what people are actually doing and what they're doing with their money, right? Money is what matters. If people can say whatever they want, if they're selling and buying, that's where their decision's being made for whatever reason. The airlines, jets, we're seeing this. Yeah, I mean, it's definitely showing some strength for the week, but what we see here is kind of like this giant cup with handle possibly forming. So in the short term, we're kind of pulling back. We're tightening up around these moving average. So this could be something to watch. This is where I'm seeing a lot of stocks starting to pop up, is in this oil and gas. This is exploration and production. You can see that this really kind of sideways, but it's starting to tighten up. So this could possibly be turning around. I would like to see this really turn around and break out of this kind of sideways action, give us more of a stage 2 uptrend. Regional banks. What else we got in here? Real estate. So what we're seeing a lot is similar stuff that we're seeing on the theme tracker, but I just like using this for the chart analysis to see, like, yes, it's performing well, but are we long-term extended and it's performing well? Or are we possibly starting to turn around? Are we starting to break out? And is this something that I could probably find a lot of different setups? But yeah, you can see a lot of what you're seeing on the theme trackers. Like I said, here, oil, real estate was in there, some financials. We're seeing this past week a lot of those more S&P defensive type plays in here. And then what it will do also really quick is let's just look at the 1 month. And again, I go by relative strength. Again, energy. We're seeing this clean tech, which is falling into that solar and energy area. The one that also stood out here, this hydrogen, which is really, truly read a lot by Bloom Energy. So a lot of energy plays coming into here. What I do also like about this is I can click on any of these ETFs, H, and I can get all the holdings right in here. So Bloom Energy, this is being the leader in there, and I can see that very, very clearly. Highly talked about stock. Hopefully this gives you guys a gist of what I'm seeing overall in the industry groups. It looks like it's going a lot to energy. It looks like it's a little bit more on the defensive side. We are starting to see some weakness in some of those tech AI names. Software, we're starting to show some strength for a little bit. But right now things are looking more towards that energy plays, oil, gas, solar, and like I said, more some of the defensive stuff than it has been. All right. Let's just talk exposure levels and then we'll get into some stocks. So exposure levels. Personally, I'll be honest with everybody, I am in all cash. I sold into cash. I basically was in cash when we had that 10-10 sideways action. We were getting chopped around. We had the pullback. Things just weren't working that well. I decided that most of the stocks I didn't have big cushions in at that time. I was just stepping into all cash, let the market do what it's going to do. If it improved, I'd get into the market. It did. I bought some stocks. I made some headway in those stocks, and then those stocks kind of rolled over. So I basically got out of the market, and to be honest, from that 10-10 point to now, I am pretty much flat. I haven't really seen any change in my portfolio. So for me, that's great. I didn't get chopped up. I wish I would have got some gains out of that little rally, but I was playing for the move to kind of continue with how strong it was. So that's how I kind of got from invested, cash, back invested, back to cash, and sitting flat with what's going on in the market. This is one of those markets that, depending on your time frame, that is what is probably going to dictate where your position holding is. For shorter term traders or people who had put in a ton of newer positions, there's very likely that you've been stopped out or put into all cash. For some of you longer term position traders, people who are holding things that they bought towards the beginning of this uptrend for the longer move, maybe they trail things off the 50-day simple moving average, they trade bigly on big weekly charts, you may find yourself still in some positions. You may have took some profits, but your core positions may still be holding up. Don't think there's anything wrong with that. If you are somewhere around that 50% invested range and it's just because you haven't been stopped out, I don't think there's anything wrong with that. Just understand your risk. No matter what the market's doing, you need to understand your risk. I think that's the most important part. So I think a lot of people are going to have varying exposure levels given what's going on in the market, given the time frames that they're trading. I told you where I'm at. That's based on my trading, what's been going on lately. That doesn't necessarily mean if you have positions and they're holding up that you're in the wrong spot. Trade your strategy, trade your time frame, have sound stops, set those stops, follow those stops. One of the things, the way we reacted at that 50-day simple moving average, we could gap up on Monday, as we tend to gap up on Mondays, and we could see this go running on, and stocks that you may have been tempted to sell might have found their short-term support level at the 50 and now may go on another uptrend. Or it just may have been a dead cat bounce and we roll back over. Nobody knows. That's the big thing. Nobody knows. So there's still some earnings. The big thing that I don't like is the reaction we've had to a lot of these earnings. We've had some companies report, pretty good earnings, but react poorly. Yeah, like I said, I think this is one of those markets where I don't think you should be fully invested. I think somewhere around that 50% range is probably a healthy area to be, and probably having your stops set fairly tight, especially with how a lot of these names have pulled back. I think that's a good way to approach the market. Other than that, yeah, not much else I have to say about exposure levels. Let's jump back over to Deepvue. And let's look at some names. We'll first go to the chat. I don't see, oh, here we go. All right, Palantir. That is actually a name that I wanted to bring up. Let's zoom in on this right here. So this name has been, I feel like everybody has that stock every year that just causes them a hell of a lot of headaches. And Palantir has been that name for me. I had been shaken out here. I kind of waited for things to tighten up. I was able to buy. I was able to see this thing go on a fairly decent run. I thought, all right, you know what? This is it. I got in. I finally got Palantir. I finally got a cushion. I'm finally going to be able to, see this make somewhat of a move. I did understand that this is, been on a longer term uptrend, but still, I thought I was going to be able to get somewhat of a move out of it. And then we had this big selling come in. We rolled over and we broke below the 50. That break below the 50 is where, things get concerning. But at the same time, we are kind of still in this, really sideways action right here, right? We're still, this was a little tighter, but now that we loosened up to those lows, we're in that kind of sideways action. This could be where we had this base, we tightened up, we broke out, we're squatting, and then we rebound again. Or this could be where Palantir just rolls over. Nobody knows. Regardless, this is just something where this has to digest what's been going on before I attempt to buy a reclaim of the 50 or anything like that. Just the fact that we're now below the 50, not positive at all. Looking at what went on here, like we haven't had many closes below the 50. Maybe one and maybe two. But yeah, getting below that 50, not a good sign. The same way we had here, right? Where we had this pullback and when we kind of digested and then we, bounced from there, like, can we see that happen again? Can we see us find that support level and then give us an entry? And if it does go up higher, get in. If not, and it rolls over, even better, just ignore it and we're done. We just wait for another base or wait for an opportunity if it does ever present it. Next up, LDN. Modric, thank you for putting these out there. Thank you for sharing these thoughts. All right. So this name, let's look at it first on the weekly. All right. So we got this uptrend, right? Clear uptrend. But the thing here, we got below that 10-week moving average. Don't like that. Don't like that we pulled back and we got below that 10-week moving average. Not very strong. You can even see in the Stan Weinstein stages is triggering, a 3A. Doesn't mean that this is over, but just still, you'd like to hold it in that 2 range. In terms of the fundamentals, we are looking, the annual earnings are great. The annual sales are The institutional sponsorship is good. The ROE is good. Relative strength. Yeah, over the long-term time frame, great. Over the short-term time frame, horrible, which is in this range here. So not ideal, not top tier. Looking at the daily, and here you can see your quarterlies. You have really, really, really strong quarterly earnings, but the sales are just not there. This company, I'll be honest, what do they do? I'm not sure. Energy, engineering, consulting, and I guess, like you said, this is playing into that kind of AI build out. So really what you're seeing here is we had this top and then we kind of rolled over and we broke below the 50 and now we're starting to struggle around these moving averages, right? We're just chopping around this sideways action. Now we have the 10, the 21, and then I also have a shorter term 5-day in there, but we're below the 50 is above every other moving average. I don't like this, right? I don't like this down slope. Can we maybe base out and tighten? Possibly. But to me, it's just, all right, if you have some conviction in this name for some reason, fine, keep watching it. But this needs to base out. This really needs to, tighten up, form kind of a base, and then start to work its way up before I'd consider buying something that has declined like this. Like from a top, we're off 24.84%. So this could be a base being formed. So sure, keep an eye on it, but nothing that is super concerning to me. Not concerning, is super interesting to me personally. All right. Now we got Q 500. You say AMPX. AMPX. Did I type that right? Nope. There we go. Okay. All right. Earnings, not so great on the annual, great on the quarterly, good on the quarterly sales, great on the annual sales, big institutional sponsorship, really strong on the yearly Ultra Strength, good on the 3 month, not so great on the 1 month. Okay. Actually, horrible ROE. High ATR stock. This is what stands out to me right away. High ATR stock, 12.86%. This thing moves a lot. And if you look at the actual size of it, it is a smaller name. Probably on the smallest side that I would ever consider myself trading. But this is falling into, what is that? Kind of same thing, manufacturers, lithium ion batteries. Okay, so this is that lithium batteries, which this industry group has been showing some strength. Looking at the weekly just to see the overall trend, this thing has skyrocketed. We are seeing the possibility of where we're getting this big IPO base. And what is kind of cool here too is seeing that we've run up, we're in a clear stage 2. I have looked at this stock, which is why I had this right here. We flagged, gapped up, but here, let's see if we go in on the daily. We are still finding support at the 50. We have had this kind of pop up here. Yeah, I would definitely watch this one. I like the name. I just think it's important to understand the volatility that you could have with a high ATR stock like that. Right? We have the 50. You have here, just from peak to trough, we're looking at, 24.59% basically base. So getting some volatility the last couple of days. Can this tighten up and give us a good entry? But yeah, I think this is definitely one worth watching, right? That lithium is playing well. Those lithium stocks is looking like those are perking up on my ETF list. I saw that during the week. Just understand the 12.86 ATR. Understand that if even with a tight stop, that ATR could be just chopping you around. So just keep that in mind. But cool name. All right. RGLD. All right. I know right off the bat what I'm going to say. I am not a bottom picker. I see the support at the 200. That's great. Metals, mining, everything. This is well below the 50. If we look at this in the weekly, this is now coming into the longer term weekly moving average, and just not something that I like to play with. Earnings are not great. Sales are not great. Institutional sponsorship is fine. ROE is okay. It's just, gold has been a leader. And this is where it's important to understand just because something was leading in the past doesn't necessarily mean something is going to be leading into the future. So, yeah, definitely this is not my, I'm not trying to bottom pick something like this, that this is the bottom we're putting in, we're coming back. If it's going to rally, we'll have time. We'll get it. We'll find our way in if it's going to be the next leader again. Jaws Sing. Look at AV. Our environment. All right. Yeah, another one that we're seeing. Look, in terms of the fundamentals, earnings are not great at all. Bad earnings. Don't like the earnings. Sales are okay on the annual side. Not great, but okay. We're seeing sales looking like they're increasing here, which is positive. Institutional sponsorship is growing, which is positive. The aerospace, airline stuff is looking great. The ROE is not good. ATR is decent. We're seeing the relative strength in the last month, not great. 3 month, okay. And the absolute strength, this is just comparing to all other stocks in the database. This, I don't know why this is on here. I don't have that there. We're in a clear stage 2 uptrend, but we are below the 50 again. So again, if you like this name, keep an eye on it. But when we're below the 50, the way everything's starting to slow down, keep an eye on it. But there's no real way for me to find a way into this now. This has to base out and give us an entry. HEI. All right, another aerospace stock. Look, I'm not going to go through the fundamentals. You guys get the gist of what I'm looking at in the fundamentals. They're okay. They're not great. They're not, something to write home about. The EPS is okay. The sales is okay. Institutional sponsorship's good. ROE's just below my ideal. Weekly, yeah, we've had this kind of go sideways for a while now, forming this kind of bigger, longer term flat base. What I like here is we have the moving averages start to turn in the right direction. We have two lows here. We're kind of going sideways. We form this kind of tight range. What's the low right here? Like this is a super, super tight action is kind of what I like about this right here. From here to here, we're looking at only a 7.67% drop in sideways action. So this is really flagging out nice, which I like. I think as a good entry somewhere maybe in here, even maybe taking out. Let's just see if I can zoom in a little bit. Sorry, I'm kind of doing this on the fly. The meat of this move is probably somewhere right around here. So you could probably say if you took out this high, maybe, or really I'd probably like to see this go sideways a little bit more, maybe tighten up because we had this kind of big range in this move on Friday. But if we can get above somewhere in here, that could be a big move. But as we've seen, that's happened before. And then we retrace. So just having a really sound stop, I think what's even good is even if we got up to somewhere in this range and you looked even at the low, like you can have like a 5% risk on something like this. So, look for your entry within this sideways action. I can see why this is very enticing. Just also, being able to have a tight stop in this type of market. And then this is good too, because you're correcting due to time. You're not correcting due to price action, right? It's just sideways is where that correction's coming in, not from a big drop down and a big comeback. So, yeah, that's my thoughts on HEI. And the ideas of time. Okay, got another one. This was from Discord earlier. Chad had asked if we could take a look at Lyft. All right, Lyft. So this, from a fundamental standpoint, right? We got strong annual earnings, really strong triple-digit quarterly earnings. We have strong, okay sales. Sorry, not great sales. Okay sales. Sales actually kind of declining if you're looking at that. Annual sales, pretty good, not bad. We're seeing institutional sponsorship slowly start to increase here. We're seeing very strong movement both on 12, 3, and 1 month. This is showing strength, which I like to see. ROE is great, and the ATR is nice. It's not too high of an ATR stock. What I like is we're getting a nice, right? We pulled back to the 50. We bottomed. We've held and rode right around the 50 and bounced around those moving averages. Now we're starting to form that right-hand side of the base. So you saw the volume coming in on the right-hand side of the base, which is really, really nice. And now we're kind of right at the lows of this kind of upper kind of sideways action. This is definitely a name to watch. With how the market has been acting, going back to 1010, right? Right around here. This is where the market was atrocious. This has just kind of moseyed along sideways, nice and tight. So I like seeing action like this, given what's going on in the market. If we can possibly tighten up again and give us a handle, right? Because we've had pretty good move from the bottom over here, from the right-hand side. Ideally, tighten up around here, give us another area to shoot against. I like that. So I like this name. I think this is one to watch, to keep on your watch list. Definitely good call on this one, Chad. And we'll just see how things go out. And again, with the overall market environment the way it is, it's not like I'm not willing to buy things. If we get some really solid setups, I'm willing to take some smaller positions. All right. A couple of names that I want to throw out there, and then I'll look at those Coup 500 as well. We have some names that just don't look great, right? And more names that are just downtrending, possibly maybe forming a base, like Hood. Just don't like the earnings reaction on there. A-Lab has been another one that This is a prior market leader that has just not been reacting well. You can see that I did trade this and it's kind of rolling over. Not great there. And we talked about Palantir, but you also have some names like Google, like that's just looking, I mean, that's just strong, super strong. We're not even below the 10-day simple moving average. So Google is looking good. Amazon's looking good. So this is where like, right, this thing just ripped and then kind of pulled back. This is where, as bad as a lot of, and that's what I think the Russell's been kind of doing. A lot of these small caps are getting hit, but some of these bigger cap names like Google, Apple, Amazon are doing kind of well. Credo, which is, I look at Credo and ALAB, Credo is looking like the leader between the two of those. Credo's holding some support. Credo kind of formed this base, looked like it braked out. It squatted back into the base. The volume came in, but yeah, we'll see. Credo, definitely watching a name like that. CrowdStrike. Another stock that's just, there's nothing really alarming about what the CrowdStrike is doing. Mongo database, nothing really alarming about what this stock is doing. AMD, it's gone on a quick up run. It's still above the 50. It's below the 21, but I don't see this as extremely alarming either, given that it's gone on a big run and given how the overall market is acting, given how the industry group is acting. This is not getting annihilated. And I think that's what I'm looking at when we get a market like this. Like, what is holding up the best? What is showing the most strength? So if we do turn around, those are the names that I want to be in. When that market pressure gets released off of these names and the market goes in an overall move, if it does, then I want to be in the names that were showing the most relative strength. All right. We'll do it really quick. I don't want to make this too long, but you guys, next tracker. No entry in this one, but this thing moving very nice, right? You could just ride. You could be, depending on where you got in, minus this close right here. If you were just waiting and riding a close below the 21, man, this thing is just beautifully trending upwards, beautifully. And if, let's just say, I don't know where you got in, but even if you got in down here, yeah, that's a nice move, and this is acting healthy, and this falls into that solar kind of area as well. So this looking beautiful. Love this. No entry, but if you have it, great. APH. Did we look at APH already? Why do I feel like I was looking at this the other day? Another name, just performing well, right? This name is in an uptrend. It's holding above the 21. This falls also into, I believe, the AI build out. Yeah, this is more like the fiber optics, things like that. But this is acting beautifully. This is one of those long-term position trades that just make things so easy, right? I mean, if you bought on like this kind of breakout earnings gap up here and breakout even of this flag, these names are those easy holds. You're up 70 something percent. So love this. No entry right now, but keep an eye on it because it'll possibly give us entry. And CLS is another one of those prior leaders. Again, acting completely fine. Support at the 21. This is a name that I blew, completely blew. I probably would have got shaken out down here anyway around the close, but I had bought this and then I got shaken out somewhere. I forget where I got shaken out, but regardless, like this, if you're a long-term position trader, this has been an easy hold. Like you could have really bought right around here, and this thing has just gone up 250%. And this is those markets where those long-term position traders, you get into one of these names, and this is the stock that makes your year, right? You have a 25% position in here, and say you trim somewhere, and then you're still holding a pretty big position, like this big move like this. This is where sometimes, you don't need a ton of names like this to make a year for you. So if you own this one, good for you as well. So this is good because we're seeing like there's some of these names, some of these stocks that we've looked at that have done very, very well. And there's some of these names that are rolling over. So could it be rotation? Could it be that these just names haven't rolled over yet? Nobody knows. So that kind of leads me to my final thoughts. And this is something that I kind of mentioned in Discord, and I just kind of wanted to reiterate here. I know this is a long one, guys. I appreciate everybody hanging in there. And hopefully you guys find value in this. I'll make this part short, but still get the point out. Everybody needs to understand that no one knows which way this market is going to go. And you have to be comfortable as a trader, knowing that nobody knows and knowing that you don't know. You don't know the top. You don't know the bottom. That is not what we are here to do. You have to, as a trader, get comfortable. I see too many people that, like, the minute the market breaks out or the minute the market rolls over, they get that emotions and they start reacting as if like, this is the next big run, or this is the rollover point. This is the top. That is not how you want to react at those points. The market will give you time to know either that this trend is turning around or that this trend is in either direction, turning around to the upside or turning around to the downside. And at those highs and those lows is where people get crazy emotional sometimes in a big up or a big down day. And that can get you just slaughtered when you start just picking a side. Let the market tell you what's going to happen. What we are here to do, we are trend following. That's all we're doing. We are trend following. Everybody in a certain time frame, right? Some people shorter term, some people longer term. We are looking at what the market is doing. We are looking at what stocks are doing. We are understanding the current environment that we are in. We are determining the probability of what would happen next, establishing those kind of key levels in all directions. If it hit upside, the market should do this if it's going to continue longer, or if it does this, it's possibly showing some resistance. So support and resistance levels to just establish different key levels, what we expect the market to do at those key levels, given the direction that the market is doing, and then just analyzing these things little by little. And then when we have those points, just having a plan for all directions at any time. Have a plan to the upside, have a plan to the downside, have a plan if we chop sideways. That is what we are doing as traders. Nobody knows what's going to happen. And even though you may be wrong, right, in a single decision, the goal is, especially as a trend follower, that we will know we're going to get in those big uptrends. We're going to get in those stocks that go on those big runs. And then we're going to get out when things get really bad. That is the goal. Let's make money in the meat of the move, but not necessarily know that we're going to pick the top or pick the bottom. That is where we're at. One of the things I think just annihilates people is emotions. It's the fear. Whether it's the fear of missing out or it's the fear of losing money, it's the panic, it's the greed, it's the ego, it's all those emotions tugging on people, having them act and make reactions, and the market loves it, right? Especially those big institutions, they love it. They love pulling on everybody's strings. They love getting you to make an emotional buy or an emotional sell. You want to have a strategy that allows you to make decisions based on the information that is in front of you. You want to have an edge, and then you want that over time, that edge and the way you look at probability and the way you look at risk allows you to beat the market. Easier said than done, right? Much easier said than done, especially for you new traders. Just the fact that you are trying to learn a trading strategy is a lot. And then even after you learn all the rules of strategy, you now have to learn how to manage your emotions and manage your personality and execute that strategy and not screw yourself essentially by breaking rules and doing things that you shouldn't do. And sometimes there are gray areas, and sometimes it's not as black and white, and that's where things get difficult too. The biggest thing, right? Take this weekend, sit back, do your routine, plan for both directions. Plan that maybe this is the bottom, right? Plan that maybe we bounce off this 50 and we go on another run. Plan that we tighten up and go sideways. Plan that we chop around and go sideways. Plan that we roll over through the 50 and this market just gets crushed. Know what you're going to do in all these scenarios. Know the likelihood of all those scenarios. And just try to look at things with just an objective and less emotional mind going into next week. I think it's a lot easier said than done, but just something that I try to reiterate for people, especially for newer traders out there, because it's extremely important. Think risk first. As long as you're thinking risk first, you'll protect yourself. And if you can protect your capital and live to see another day and live to see another market open, yeah, that's what it's all about. Because there are going to be times where it's super easy, like the beginning of the year, and you're gonna feel like an absolute genius. You're gonna make a chunk of your money, and you'll be ahead of the market, beating the market. And then when the market times come like this, where maybe it's not as easy, maybe it's a little more choppier, it's not going to stress you out as much because you're going to say, "Well, I'm way ahead of the market in general. My work is paying off because I'm doing better than if I would have been invested in the QQQs or the SPY or whatever other index or mutual fund." so I don't have to feel so much pressure right now when the market environment isn't ideal for me. All right. This was a long one. Like I said, I appreciate everybody. I hope you guys find value in this longer one. If you are watching this, I never really say this, but subscribe to the YouTube channel. Hopefully it gets out to some random people, not just people that know from Discord and from X. And yeah, there is the YouTube link. So you can subscribe to that, check that out. All the recordings are easy to find on YouTube. You can go back and see the last 28 episodes, see what I was talking about throughout the year. You have your X link there, Discord. There's a link in the description of the YouTube. And then on X, just shoot me a message. I'll get you a Discord link. And then there's my email. With the email, if you want that ETF list that I built out, shoot me an email in the subject, but send ETF list or something like that. And I'll just reply with the Excel sheet so you can have that. You can dump it into whatever platform you use. And again, Deepvue is opening up soon. So get on that wait list and you'll get notified. I really, truly, I have yet to see another platform that for the price gives the amount of features, and they are still pushing the envelope to make some crazy updates that make my life much, much easier. So huge shout out to that, guys. Shout out Deepvue, shout out TraderLine. Love the product and can't wait to see what's coming in the future. Thank you. Appreciate that. And I also do the Deepvue onboarding too. So you'll probably get an email with that, and we could sit down. I could help you set your platform up to your trading strategy. So thank you guys. Enjoy the rest of your weekend.